Central banks around the world coordinating and signaling rate increases. The result may be higher mortgage rates and lower house prices. Central bankers across the globe are saying that they need a more aggressive and hawkish approach to interest rates in order to win the race against inflation. Some Canadian banks are also expecting further Bank of Canada rate hikes soon. According to an article published on CNN on June 25, 2023, central bankers worldwide are emphasizing the need for decisive measures to address persistent inflation. While inflation rates have slowed in various countries following a series of interest rate hikes, they still remain above the targeted 2%. Raising interest rates is the primary tool available to central bankers to curb inflation. However, research suggests that the effects of such actions take at least 12 months to be felt across the economy. Consequently, central banks face a delicate balancing act, as the risks of both excessive and insufficient actions to combat inflation are substantial. The analogy of a plane ascending to a safe cruising altitude, presented by Christine Lagarde, President of the European Central Bank, highlights the necessity of finding the right level to control inflation effectively without causing turbulence. Persistently high service prices, which have proven resistant to rate hikes, present a challenge for central banks. Delaying necessary measures could result in a more difficult task of curbing inflation in the future. Swift action is crucial to prevent inflation from becoming even more persistent and harder to control. ECB and other central banks urged by the International Monetary Fund to raise interest rates further. On June 26, 2023, Bloomberg News reports that Geeta Gopinath, the International Monetary Fund's first deputy managing director, has called for the European Central Bank, ECB, and other central banks around the world to continue combating inflation despite the potential for economic slowdown. Gopinath emphasized the need for central banks to refine their strategies due to structural shifts in the economy, which pose increased upside price risks and potential tensions between price and financial stability objectives. Governments were also urged to assist in fighting inflation instead of relying solely on monetary policy, allowing for earlier rate hikes and minimizing negative consequences. Central banks, including the ECB, have reaffirmed their commitment to price stability. Gopinath noted that financial stresses could warrant a slower return to the inflation target but emphasized that the threshold for doing so should be high. Furthermore, Gopinath highlighted the need for more aggressive reactions from central banks in the face of broad-based supply shocks or if inflation is persistently above the target. The costs and benefits of quantitative easing should also be reconsidered in certain economic conditions to avoid potential overheating and abrupt policy reversals. Powell's Bombshell. U.S. Federal Reserve Chair says more rate hikes needed to combat high inflation. The U.S. Federal Reserve Chair Jerome Powell stated that due to persistently high inflation in the United States, further interest rate hikes are likely to occur this year. According to an article by the Associated Press on June 21, 2023, Powell emphasized the need to bring inflation back down to the target rate of 2%. The recent decision by the Fed to keep interest rates unchanged after a series of 10 consecutive hikes has led to increased uncertainty regarding the central bank's next moves. The article also highlights the divergent views among politicians regarding the Fed's policies. Some want continued rate hikes to combat inflation and others supporting the decision to pause. Powell also mentioned that the Fed's decision to keep rates steady was influenced by the recent bank failures and their potential impact on the economy. The central bank's future actions remain uncertain and will be determined based on evolving economic data. Bank of England hikes interest rates to 5%. Stoking fears of a mortgage bomb and housing price declines. The Bank of England raised interest rates to 5% due to persistent inflation, leading to concerns over a mortgage crisis. According to a CNN article on June 22, 2023, the move will impact mortgage holders and house prices. The decision came as inflation remained high at 8.7% in May. The forecast suggests rates may reach 6%, affecting over 2 million mortgage holders. The rise in rates will dampen consumer spending and potentially deepen the UK's economic slowdown. Prime Minister Rishi Sunak faces a challenge in meeting his pledge to reduce inflation. House prices are expected to decline by 5%, with mortgage holders facing higher monthly payments. The situation may lead to a prolonged mortgage crunch. Longer-term loans and accumulated savings could mitigate the impact, but a decline of up to 25% in house prices may occur if rates stay high. Bank of Canada must raise interest rates higher in order to stabilize the real estate market, says ScotiaBank. ScotiaBank warns that the Bank of Canada needs to raise interest rates to stabilize the real estate market and counter inflation risks. According to a recent article in betterdwelling.com, the recent surge in home sales, driven by lower interest costs, has increased concerns about housing-related inflation and economic instability. The article emphasizes that the central bank should prioritize housing and take action to prevent a repeat of past housing booms caused by low interest rates. Relying on the U.S. Federal Reserve for a solution is impractical, and delaying the policy rate increase would worsen housing imbalances and contribute to inflationary pressures. Canadian mortgages about to get more expensive. BMO expects 2 more rate hikes by Bank of Canada. BMO expects the Bank of Canada to implement at least 2 more rate hikes after their surprise June 7, 2023 increase. According to a Better Dwelling article, the Canadian economy is running strong, with elevated core inflation, record employment, and rising GDP. The last rate hike has led to an increase in 2-year and 5-year yields, indicating that mortgage rates may soon follow suit. This development could slow down the momentum in the housing market, which the Bank of Canada is unlikely to be concerned about. The article suggests that the Bank of Canada's actions reflect a deliberate attempt to curb housing demand. Australia unexpectedly raises key rate, may tighten further and worried that it may not meet inflation target. According to a June 6, 2023 article by Bloomberg, Australia's central bank unexpectedly raised its key interest rate by a 0.25 percentage point on June 6, 2023. The Reserve Bank increased its cash rate to 3.85%, the highest level since April 2012. The decision was predicted by only 9 of 30 economists. The bank signaled further policy tightening ahead after the rate hike, keeping the door open to further hikes. The move was made to tackle elevated prices and inflation. Inflation in Australia has been rising steadily over the past few years. According to Trading Economics, the annual inflation rate in Australia climbed to 7.3% in Q3 of 2022 from 6.1% in Q2, above market forecasts of 7%. This was the highest print since Q2 1990, boosted by higher prices for new dwelling construction, automotive fuel, and food. The current inflation rate in Australia is 7.02%, which is calculated based on CPI, Consumer Price Index, values for the last 12 months ending in 2023 Q1. The Reserve Bank of Australia has been trying to combat inflation through various measures such as raising interest rates and tightening monetary policy. The bank has also been closely monitoring the housing market and has implemented measures to cool down the market. Others such as the Swiss National Bank and Turkey's central bank have increased their bank rates and have indicated that further rate hikes may be warranted based on future economic data. If you found this video and information useful, please smash the subscribe button and hit the notification bell so we can keep providing you with timely information you can apply on a daily basis.